The Wealth Equation podcast by Maurice L. Wilson reveals how to accelerate your wealth and secure more money, time, and freedom by leveraging the investment powers of real estate, entrepreneurship, the stock market, and more. Tune in as host Maurice L. Wilson, an engineer turned financial advisor, offers you a step-by-step formula to solve your wealth equation once and for all. Here's Maurice.
All right. Hello and welcome back to the Wealth Equation with your host, Maurice L. Wilson. Today, I am happy to have we can't say partner in crime, right, Marcus? That's not compliant. So, my partner in finance, the illustrious, the great Marcus D. Johnson of Johnson Capital. I'm gonna let you introduce yourself, Marcus. Tell everybody who you are.
Thanks again, man. Marcus Johnson, from Nashville, Tennessee. Johnson Capital Planning is the firm that we have that me and Maurice have been working together for the last, what is it now, 4 years?
It's coming up. Yeah, 4 years in February. Four
Yeah,
years in February. Wow. Okay.
it doesn't seem like it's been that long, but yeah,
Yeah.
4 years.
Yeah.
And so yeah, I'm happy to be here, man. Happy to have a conversation, an ongoing conversation, because it's a lot of things going on in the economy. It's a
Exactly.
lot of fear right hearing from clients, and so just kind of being that, like that pilot that kind of comes on and you hit that turbulence, right, and then they just come on the speakers and tell you that things are easing, and for whatever reason you just start to feel better. That's what we want to kind of have with you guys too, is just kind of make you feel better about what's going on in the economy.
Exactly. I actually was in a meeting with a client an hour ago, actually, right up the street, and he's gung ho. He's like, "Hey, Maurice, push all my chips in." He's the exception, I would say.
Yeah, for
There's,
sure. For
there's
sure.
everybody else who just they aren't looking at statements. They aren't, they're scared to log into their accounts. And I think the general feeling on the street is just fear and trepidation. And but we've had some changes in the narrative, at least in the last 48 hours. Do you think that with some of the words coming out of the administration that the worst is over, or what's your take on where we are right now?
I mean, so I think it's a two-part situation, right? So when you think about, if the tariffs do decide to disappear, right? And things can kind of go back to normal, then cool. Because I think part of the problem is that how do you value a company if you can't really determine what the end cost is, right? And so I think a lot of the trepidation is coming because of that, right? So you can't price or value a company if you don't know what the end cost is going to be. And
Right.
so because of that, that's kind of what you're seeing, the trickle down effect of that. Now, if that does decide to go away and the tariffs aren't a thing, then maybe we can kind of flatline. But I think there is a caveat to that, right? So what people aren't talking about is all of these companies are still laying off.
Right.
So I think that that's a bigger indication that something is really going on besides just the tariffs, right? I think that's a big problem, but you have companies across different sectors that are still laying off, right? So I think it would be, it would be different if it was having a conversation, if it was one industry that was laying off, people. But the fact that you're talking about multiple different industries are laying off people, I think that that's a pause to have some concern, and have a different outlook. And so I would tell clients that I would rather be patient to kind of let this thing, do what it does before we just go all chips in, right? And being a little bit early to market, going back in and really starting to get kind of aggressive.
Yeah, I mean, case in point, a couple of different examples. One, let's just start with pushing your chips in. My favorite bear market story is Amazon. 1999, nearly 1,000% gain. 2000, 75% drop. I'm sorry, yeah, 1998, 1,000% gain. 99, 75% drop. 2000, 45% drop, and then it's off to the races, right? So if you came in after the 75%, you still lost your shirt, and then it finally went up. So you can be a little too early, but if you had just even waited and was a year late, 2 years late to the Amazon story, you still made a ton of money by 2025. So if it's like when styles change, like when when hip hop got in style, it was in style for 25 years, a generation, right? And so you don't have to be the first one to that party. But to your point about all of the other things that have been happening with the layoffs, I mean, what happens when one of the largest employers in the country, the federal government, offers all these buyouts, lays off all these people, fires all these people? Buyout or not, these people are spending less, right? Okay. Tourism related industries have definitely been impacted, right?
They're taking
Tourism
a
is
hit.
going to take a hit, right? So then you got that tech industry, like Intel is going to lay off 20% of their workforce. I think that was always going to happen, like you said. Um, so you're having, I know people that are tied to the tech industry, Amazon, Microsoft, they're all getting rid of low performers. They're cutting the fat. So there is a lot going on that I think we're going to get this recession,
Yeah.
that we've kind of been toying around with for a while. And so,
On top of,
yeah,
right, credit card debt.
right, right.
Right? So we seeing
Oh,
all-time highs
mhm,
of credit card debt, right? So you talking about people are living and spending on their credit cards and then getting laid off,
yeah,
right? I think that that's going to be a huge problem for us. On top of the fact that, outside of all of that, I think a huge problem is the fact that our president and our
mhm.
Federal Reserve chair are at they're having issues.
They're having issues.
Right. I think that's the best way that we could kind of frame that, right? So when you add all that together, I can't be optimistic that everything is just gonna be great, right? So I was doing a workshop today for a charter school, and I had a 22-year-old young woman ask me a question and it kind of took me back, right? And so her question was, all of the stuff that you're talking about, I'm reading all of these headlines, and what would make me as a 22-year-old person want to invest in any of this stuff that you guys are talking about? Because you're seeing like every time I turn on the news, it's some bad news,
Yes.
right? And so it kind of made me smile, but at the same time, it's like if I'm 22 and I have no context of how any of this stuff works, I'm
Right.
probably framing my mind to think exactly why would I do that, right?
Right. Right.
And so I know that you have kind of like a headline piece of all the different headlines that
Yeah.
we've had over the course of since 1929, right? So I kind of want you to talk to through that because I think that that's powerful.
Right. I wish I had loaded it up. Maybe I can load it up while I'm talking. But yeah. Basically, you have. I even have one in my office here, but you have all of these headlines that talk about the impending doom. Basically, everybody's seen a movie where they make a parody of the guy that's on the street saying doomsday is coming, right? And so we all know that that day has never come. And so there are headlines that are doomsday headlines that going back, like you said, to the 1920s. And some of them people know, like capitalism is dead is a big famous headline. There was one tied to housing market, but it was in the reverse, like just how great the housing market is, and that was right before the crash. I think Jim Cramer is famous for saying the S&P or the Nasdaq's going to go to like 5,000 at the time. That was the top of the market. It crashed later on. So there's all these headlines that are, even I'll say the most recent one, the Sell America trade. Like there was literally a Sell America headline yesterday before the parties that be kind of changed their mind. So when I think of like the 22-year-old, I think of the 70s. Like in the 70s, we had a bear market. The market started here in 1970 and ended here in 1980. It was a flat market with two bear markets inside of there. And you had lines at the gas station, geopolitical conflict. People didn't like Carter. Nixon was still hanging on, kind of an after hang on the economy. All these people have been assassinated. It was just garbage, right? And just a
Yeah.
corporate malaise. And though that was probably the best time to get ahead of the 80s, 90s boom. And so that's what you tell them. It's like the headline. You can't invest by headlines. You got to invest based on fundamentals, technicals, and just getting in on the ground floor if possible. So yeah.
Yeah, and to your point, right? We had all these different headlines, and so my question back to her was, is this an excuse for you not to manage your money properly?
Yeah.
Is this an excuse for you to not make sure that your money is working as hard as you? Because I tell people all the time, if your money isn't working as hard as you are, you're gonna be working for the rest of your life.
That's
The
true.
worst thing that you could do is wake up, be 65, 66, 67 years old, and have spent every dollar that you've ever made, right? And your excuse is that I was fearful. Your
Right.
excuse is that I had these headlines, right? And
Right.
so I looked the dead in the eyes, like, look, we got to get to a place where we're going from generational consumption to
Yeah.
really trying to figure out how we can get to generational wealth,
All
right?
day.
And we can't do both. And
Yeah.
so, and it all comes from your mindset.
Yeah. Now I like that. Of course, you're great with the. That's why you are. You know, you're the closer. You know that those are awesome. You know, I was just telling the client the one I met with before we had to going live, and I was saying, you know, we were talking about saving for college, and I said, well, think of the Walton family. Like the Walton family has the shares that Sam Walton gave them. They still have them, right? And you and I know there are ways we can keep those shares, use those shares, and just keep passing them on, but still benefit the family. And that's that generational wealth. And I think sometimes when people think generational wealth, they think it's a big number, but it's literally, to me, just, you know, okay, you're a first time homeowner. The next generation shouldn't be first time homeowners, right? You're a first time investor. The next generation shouldn't be first time investors. So I should inherit a house, right? I should inherit a stock portfolio. I should inherit land. And you're right. If a headline stopping the 22-year-old, then his or her,
We
22
don't.
year old
We
ain't
don't.
gonna have nothing, right?
Right, because then you got to think about it from the context. I had to let her know, like, listen, out of everybody in this room, you have the biggest opportunity because you're receiving this information at 22. So you
Exactly.
starting at 22, and some of these other people are in their 30s getting this information. Even if you did less, you're still going to have more because of time, right? Time is our best commodity. And
Exactly.
so, I would tell you that, right? The markets are on sale. So
They are.
because they're on sale, you're able to get in at a better price. So it's kind of like if we was to go to the Walmart that you talked about and
Right.
everything in there is 30, 40% off, what are you going to do? Right? You
Exactly.
should be buying, right? And so that's kind of the mentality that you should be, having for sure.
Yeah, and we talked about this last week, like having cash for these markets and key intervals to buy in. And one of the key points was a 2-for-1 sale. Like, when this market gets down 50%, the market or the investment, hey, you should come in and grab some of that. I mean, it's going to bounce back. It bounced back after the pandemic. One that I mean, Netflix, the Great Recession, Netflix was just coming out. They were still sending DVDs, no streaming really, and the stock crashed right in 08, 09. And I saw it and I didn't buy it, but I mean, Netflix is trading at 1,000 right now. They're like one of the cleanest companies, and by clean, they don't have international tariff exposure. They're a service-based company, but they're a tech company because they can scale. And so this one of the best stories on Wall Street, and it was in the dumpster back in 08, and so I wasn't 22 in 08. I was close enough. So little things like that I think about. And that's why this go around, I mean, we can't talk our book, but we're already doing some of those things for our clients. We're
Hmm.
finding some of those good deals. But we're doing it in a manner where, if this gets worse, we're not going to lose our shirt. And
Hmm.
that's one thing when, she's sitting in front of you, she's got a great opportunity to be a part of that story. And that's kind of like what we want to tell people. It's like, look, if you're scared to invest, you've got a team here that you can talk to kind of be a sounding board and get you positioned smartly. Small sales pitch, but I think it bears saying. I
No,
mean,
I mean it's just we've come to the line in the sand or the road, the cross that we have to go, the pitch in the road or whatever the saying
yeah,
is that we can't continuously sit on the sidelines.
exactly.
Right. And so, even though the headlines sound bad, we may not agree with, what side, left or right, from a political standpoint. Like we can't use that as an excuse anymore, especially if we're trying to close the generational gap that everybody refers to when it comes to Black and brown people, right?
Yeah,
And so you're never going to be able to do that if you're not willing to get into one of the best ways to create wealth, right? So we talk about how the wealth in this country was created, three ways, right? So you got business, you got real estate, and you got stock market. And I think for, people of color, one of the ways that we've been kind of missing that boat is by, making sure that our money is in the market working for us. And so, I would just say to anyone out there, I know it's scary. But that's why you hire professionals. That's why you get with people that, are not leading in with emotion. Because a lot of times when it comes to money, we typically get emotional and start to, view money as a tool, and maybe we'll make better decisions with our money, because that's what it starts with. It starts with the mindset.
It is a pleasure to have you join us for this episode of The Wealth Equation. Be sure to visit wilsonwealth.com for more information about building wealth. We look forward to helping you next time on The Wealth Equation.